Ah, let's go. Supply and demand, ladies and gentlemen. Welcome back to another recording. If you made it this far, congratulations. You are on your way to being an advanced trader, understanding more and more and more about the market. I I want to say how proud I am of everybody who has stuck with the videos, who stuck with the process, and day in and day out, they show up every single day to get it done, to trade and to go through the tribulations and the lessons and the losses and overcome the fear of losing and the fear of missing out. So congratulations to all of you guys who are here with me today. We're going to be talking a little bit about supply and demand. Uh, core economic principle, right? Supply, and then demand. So if you have a product that has a large demand, you can sell your product at a higher price. Now, let's say you have a large amount of supply for that product, you're most likely going to lower the price to sell more of your supply. Now, the more you own of something, the more you are willing to supply it. Okay. The less you own of something, you're not as willing to supply it. You're also demanding what you don't have a lot of. So when we're looking at the currency market, when we're looking at supply and demand on the chart, we're going to break down exactly who's supplying what, why there's sellers at higher prices, and who's demanding what at lower prices. Okay. Supply represents the amount of a particular currency available in the market at a given time. On the other hand, demand represents the desire or need for a particular currency. The exchange rate is the price of one currency in terms of another. It's determined by the interaction of supply and demand for the two currencies. What affects supply and demand? Interest rates, which we talked about in the last video, right? Interest rates. So the higher interest rates in a country tend to attract foreign capital, increasing demand for that currency. Conversely, lower interest rates can lead to a decrease in demand. So if the dollar index, if treasuries, if bonds, short-term yields are paying out 5% returns, are you going to own dollars or are you going to own Japanese yen, which is paying out negative 0.10% interest? When the dollar index, when interest rates decrease here in the US, we should see the dollar index, the DXY, start to fall. There will be less demand for our currency. That right there is massive. If you understand that right there, you're golden. Economic data, economic indicators like gross domestic product, employment data, inflation rates can influence the perception of a country's economic health, affecting currency demand. Political stability, government policies impact investor confidence, consequently currency's demand. Market sentiment. Speculators and traders in the currency market often make decisions based on market sentiment, which can lead to short-term fluctuations in supply and demand. Let's really analyze what exactly makes a country's currency more popular than something else. I want to talk about the British pound. when they left, when Brexit occurred and they left the EU, the British pound lost value because it was pegged to the euro and they wanted to be independent from Europe. When the British pound did that, their currency became less valuable because they had less to offer the market. Venezuela, Mexico, South Korea, Russia, China, Taiwan, Sweden, Denmark, Africa, the African rand are all worth nothing. You, as an investor, as a business owner, as an entrepreneur, do not demand their currency. So they're when you're investing, excuse me, when you're investing, you're going to demand a currency that is valuable. Hence why the dollar index, the Canadian dollar, the Australian dollar, the New Zealand dollar, the euro, the British pound, and the Swiss franc are the most dominating currencies in the market. Now let's talk about some technical analysis. We're going to get into some technical analysis. We're going to look at the chart. We're going to look at supply. We're going to look at demand on different time frames. And I am going to actually go on TradingView. I do have a couple pictures for you, but yeah, we're going to look at some actual representations of supply and demand. I love trading supply and demand. It is actually one of the biggest tools I use to analyze price. So what is a supply and demand zone? Right? It's usually a potential reversal point on a chart. So a supply zone is usually higher, by the way. Like you're going to want to supply your currency at a higher price, right? You're going to want to sell it at a higher price. So a supply zone is an area where there is an abundance of sellers, potentially causing prices to fall. While a demand zone is where buyers are numerous, potentially leading to price increases. When looking at levels of supply and demand, identifying zones rather than support and resistance will better judge where buyers and sellers prefer to trade. Should make sense. So boom, the weekly chart of good old Euro USD. We have our supply zone at the top where we can see price reaches that area. Well, technically it's just a range, right? So the range of $1 and what is it? 1.4, $1.40, right? Is where a lot of sellers are supplying currency. They're willing to sell their euros at that price level, which pushes the price down. Look at the demand zone right down there, ranging from $1 to $1.10. The euro is highly anticipated to go up from that level. Why? Because people demand the euro at that price. And it makes sense. You're going to buy low and sell high. That's what the market is. That's what we're looking at, right? As a trader, you're looking for trade opportunities within these ranges. With economic data, with all the global stuff going on, excuse me, with all of the global things going on, the day-to-day, what makes someone want to sell their euros and buy their euros? And that's looking at every currency, right? Why would you want to buy the Aussie? Why would you want to buy New Zealand dollars, the Kiwi? Why would you want to buy Swiss franc? Why would you want to buy dollars? And there's always reason that's change. The seasons are always changing. There's reasons why people sell up here and demand it down here. There's also reasons why it sold off very heavy down here. Has a lot to do with interest rates, has a lot to do with inflation, has a lot to do with Earnings has a lot to do with technology, innovation, has to do with a country's development, has to do with a country's political stability. So all of it ties in, and the markets fluctuate from season to season. And our goal as traders is to break it down the best we can, pick our supply, pick our demand, and choose whether we're going to buy or sell within these levels. So let's go down to the 1 hour. Now we're dramatically dropping in time frame. I understand. But when we go down to the hour time frame, okay, we're going to see that when price is selling, people are actively selling their euros at that level, making price go down. When price hits a demand level, people are actively buying euros at that demand level, making price go higher. And then whoever is selling more or buying more, the market will go in that direction. When the market's in a downtrend, and we see here that the market is supplying, there's a supply zone here where price comes down into it, and every time it sits within the rectangle or at the price level of 1.09400, people are selling their euros at 1.09300. When price comes down away from the supply zone into a demand zone of 1.08650, price is supported by the demand zone because people are buying euros. How do you trade that? Very simple. You draw in your supply and your demand zone, and you look for a manipulated setup within the rectangle. You look for an entry to go back up into supply or down into demand. That is how we use supply and demand. So let's get out of there. Let's go to the internet. The internet. Very nice, very nice. Let's go to Euro USD. I've been loving Euro USD, by the way, lately. It's been really, really nice. It's been playing really, really nice. So, okay, hold on. Let me pull up a nice clean chart. That is not a nice clean chart. Please be a nice clean chart. That is not a nice clean chart. Ice, ice, baby. Why do I have so many lines? Let's just go ahead and get rid of these lines. We're going to go to the weekly. We're going to go to the weekly. We're going to talk about our supply and demand zone again. Okay. 2006. Yeah, whatever. All right, this is perfect. This is perfect. This is perfect. This is perfect. I'm sorry. We're going to go down to the daily. I apologize. There we go. $1.23. Okay, so this was, yeah, perfect. All right, perfect. We're gonna get our rectangle out, guys. We're on the daily, by the way. We are on the daily time frame. We're looking at Euro USD. And I don't know why though. It looks really different from this one. Why does it look so different? Okay, 124, 125 is a high. 120. Okay, perfect. Okay, what do we have up here, right? We have a large area of supply and demand. Notice how in 2012, like look at price real quick, guys. In 2008, okay, we had a large what? Area of demand, okay, on the euro. There was a large area of demand. Notice how every time the euro came down into $1.24, the euro found support. There was a lot of buyers entering the market at $1.24. Where were they supplying price? People were selling and supplying their euros for people to buy and slash sell at $1.48. Now, this was back in 2008 to 2012. What happened was in 2014, we saw a dramatic drop in price. So people were really collecting a lot of dollars over euros. Like that's what that data indicates to me. is that people are buying dollars over euros. So now what do? We drag our previous demand zone, we drag it outward. This now becomes our supply zone. Okay, boom, what happens, right? Once price finally retraces all the way back to $1.24, that is now where people are willing to sell their euros at. Does that make sense? It's almost like the ceiling and the floor method, but just with a zone now. We're looking at zones, okay? So where did people demand euros at? $1.04. Okay, so in 2015, people demanded euros at $1.05. It made price go higher, right? Price finally shot all the way back up to $1.24 in 2018. And then in 2019, 2020, right? From that range period, it looks like the dollar gained strength again. And then COVID hit in 2020. Notice the price action here on COVID. We can see it very easily. Notice the price reaction when society entered the COVID-19 era, right? Large spike up, large spike down, large spike to the upside. Interesting. And then what happens? We have record high inflation here in the United States. We have record high inflation in the United States. So what do? People sell their what? Their euros, and they start stacking dollars. And why did the euro go all the way from $1.22 again, all the way down to 95 cents? Because we had record high inflation and we started raising interest rates, which paid out a better return than the euro during high inflation. So what do we see here? We have our demand zone. Notice when price reached the demand zone, it had a few buyers, right? It had a little bit of buying pressure right in here. Right at the kind of like the edge of the rectangle, I guess you could say, right? So we had some buying, but then it just kept falling. What happens? We start to lower inflation towards the end of 2022 into 2023, right? Inflation starts to cool down a little bit, still not at 2% levels, but it's cooling down. So what do? We have our demand zone, right? Our demand zone stretches across here. And where are people buying euros at? $1.05. $1.05. Our supply zone is now within this range over here. So our supply zone is now this range. Do you guys see why this is now a supply zone where people supplied euros a lot within this level? And actually the euro almost came up back into the rectangle, $1.15, before taking a nice slump off. So here we are one more time, okay? Here we are again within our range, right? We have a nice range here, you guys. We have our demand on the bottom and our supply up top. We are going to go down to the 4-hour. And we're going to look at price within the range, right? I mean, remember, like me and you, we're trading every day. So we're catching pretty minimal moves. Like it's not like we're holding trades for, 86 days. Some people do, obviously, but the type of trading we do, we don't hold it for 86 days, okay? Excuse me. So we're trading within our range. Let's identify our supply zone and our demand zone on the 4-hour. Here's our supply zone, and here is our demand zone on the 4-hour, okay? People are selling euros at $1.10 and buying it at $1.07. We're going to go down to the 1-hour. Okay, look at this. Look at this, right? People are selling up here, buying down in here. Price is currently trading at $1.08. $1.08, 500, call it, okay? Notice how choppy price is right here. let's get down to the science. Where are people supplying yen? Euro. I'm sorry. I apologize. People are supplying euro where? At $1.08, $1.09. Where are people buying euro? $1.08, $1.08. People are buying euro at $1.08. Notice how there's a supply and demand zone on every single time frame. Every single time frame, there is a supply and demand zone, and that is what we start trading from. People are what? Demanding euro right here at $1.8500. And then what? Comes back up into where? $1.09. People supply, people sell, comes back down, makes a lower low. People demand euro at $1.08, right? Pops back up. Okay. We extend our previous demand outward, right? People are starting to supply euro at $1.8500. Okay, so boom, sells down, comes back up, sells back down, comes back up, sells back down, comes back up, comes back down. Do you guys see the relationship with supply and demand? I think this is one of the best ways to analyze is supply and demand, because you can have tremendous trade opportunities using supply and demand. And it's actually quite simple. Supply and demand. It's not very complicated at all. You know what I mean? And especially if you're on your 4-hour time frame and you're looking at price. I mean, look how simple this is. You have a demand zone at $1.09. People demanded euros. Once price went below $1.09, people then supplied euro at $1.09 and it went downward. So based off your knowledge that it was demanding here, traded lower, right? So people demanded a lower price now. People are going to probably sell it up here where it was once demanded at, and vice versa, right? I mean, like it's there's a science to it. There's a psychology behind it. So, how do we take trades, right? How do we take trades? I'm going to go to a specific currency pair that I took a trade from yesterday. I took a trade yesterday from a specific supply and demand area. And I'm going to show you what trade. This is the trade I took just right here. Woo, 170 pips. We only caught 75 pips, which is still a great move. But notice this, guys. What do we see here on the 1 hour? We have a what? An area of demand and supply where we have a lot of buyers and sellers. So like it sold off here, came back up, came back down, bought up. One more time, 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 bought up. Finally shot all the way down, all the way back up, all the way back down. What do you notice here now? People are starting to sell their dollars for yens at 147,900. So what am I thinking in my head? Oh my God, we are going to see the yen drop from this $1.47 level because people are starting to sell more yens than they are buying, right? Does that make sense? So boom, price is consolidating, but still loving this level here. And then finally today, it took off from that level. So now what? Now I'm thinking to myself, okay, we had a nice rejection to the downside. Price absolutely finally tanked away from the downside, right? Into what? An area of demand. An area of demand that was supply and demand beforehand over here. Notice how price hits here, shoots up, right? So people bought yen at $1.46,400. It went up, but still more people were selling. It tanked, came right back up, and then tanked again from that area of supply and demand. Revisited it here, right? Rejected it one time before coming higher. Even this small little wick here, this rejection here was a beautiful reaction to the upside, right? So here we are again at this level. Are we going to see price stay at this level and buy at 146,300? Are people going to buy more dollars over yen at 146? Or are people going to continue to sell price at this rectangle? And so you can take trades based off of these levels. So if price shot down, now I'm looking to take a sell position from here. If I'm going to look for a sell position, I'm going to look for one from this area where price was once demanded. That's the secret. That's the key. That is the key. If you're going to look for a trade, always wait for the pullback and always wait for a lower time frame setup. So I'm going to wait for price to either come back up into here to then sell again, or I'm just not going to do anything. That's simply it. So supply and demand at its finest. I hope you enjoyed this video. It's going to be a little longer, I understand, but the more time you put into learning and more time you put in your education, the more you'll get out of it, the more results you'll have, and that subscription fee, that car payment, that phone bill will just become absolutely fragments of your bank account. Such small fragments of your bank account. Just continue to put in the education, continue to put in the time, and I will see you all on the next video. Take care.